Welcome to this video. In this video, I'll be teaching you how you can understand forex indicators, understanding and using forex indicators. So now, the first thing I want us to understand about the indicators, let's go to the indicator side, is that we're having different types of indicators. We have the trend indicator, the oscillators indicators, and we're having the volume indicator and the Bill Williams indicator. But I want to focus on the trend indicator and only the oscillator. Why? Because the other ones are not really so important. So now, the trend indicators actually show you where the trend is and where the trend has been. It is showing you the current trend, where the trend is, and where the trend has been. That is it. That is the trend indicator. And we're having the average directional movement index, Bollinger Band, envelope, Ichimoku, moving average, parabola star, standard deviation. They are actually our major trend indicator, but I suggest you only use the moving average and the Ichimoku for trading as a trend indicator. Only use that one. Then in oscillators, we're having the average true range, bear power, bull power, commodity channel index, demarker, force index, MACD, which is moving average convergence divergence. We're having the momentum, we're having the moving average of oscillator, we're having relative strength index, we have the relative vigor index, and stochastic oscillator Williams percentage range. These are actually the oscillators that we are having. So these are actually the oscillators that we're having. But I would suggest you learn how to only use the MACD, which we are going to be using, the commodity channel index, the relative strength index, and the stochastic indicator oscillator. These are the major ones I would love you to learn in the oscillator. So quickly now, let's start with the moving average, which is the trend indicator. How do you add it? Let me first of all delete this. How do you add it? You click on this plus sign, go to your moving average, and then there is a period here. You select the period you want. You select the method, apply, you select it, and the style. So you click it. This is how it looks like. This moving average 200. Are you seeing it? Now let's add another moving average again. Let's add another moving average. Now I'm adding moving average 50. You touch it, period 50, and then you touch the color, change the color. I'm changing it to blue. This is how to add it. So now, this is moving average 50. This is moving average 200. All of them having different colors, so you can have different colors to help you, so you will not be confused in the market. You get it? So that is for that. Now let's add our oscillators. Once we add our oscillators appear at beneath it. It forms another window. So let's add our oscillator. I prefer with using the relative strength index, period 14, level 30 and 70. Yes, so we have it like this. So look at this, guys. How do we use it? How do you use it now? Anytime price is above this 200 moving average in the higher time frame, like an hour, 1 hour time frame, you see it means that we're actually buying. It means we are actually buying. So how do you buy now? You wait for price to come down to your oversold here. This is overbought. The 70 is overbought. The 30 is oversold. Let me even write it for us. Let me write it for us. Overbought and oversold. Let me write it. Okay, I have to on the data. I don't want to on the data because of distraction. Okay, so once it's on overbought, which is here, it means that there is tendency that the market will begin to sell. That's going down. If it's on oversold, if it's on oversold at this point, it means that the market have been selling for a long time and it want to what? Buy. It is tired of selling, so it want to buy. Definitely the market will start going up for a buy. Look at what happened here. Because after overselling, there was what? Buying. Because the market does not move in a straight line, it moves in a zigzag manner. Please take note that forex market does not move in a straight line, it moves in a zigzag manner. It moves in a zigzag manner, not in a straight line. It moves in a zigzag manner. For every sell, there must be a buy. For every sell, there must be a buy. And for every buy, there must be a sell. Take note of that. So that is for that. So once you want to, if you want to use this, this relative strength index to trade, make sure you understand the overbought and oversold. When it is down, it means it has bought. It will definitely start going up for a buy. You can enter your trade for a buy. When it is at the top, you can actually look for a sell to go down. And let me tell you one secret with this chart, with this candlestick, that once you see the candlestick coming close to the moving averages, there is actually going to be reaction. So there are different moving averages that we are actually using. We are having moving average 20, 21, we are using 50, 13, we are having 200. There are different moving average that you can use. So that this is just how you understand how to use the indicator. So let's now delete this indicator and add another indicator. Let's look at MACD, because the other indicator stochastic is this almost the same with the relative strength index. So let's look at MACD. Let me explain to us how it works. The MACD, I love the MACD because it gives you what we call the divergence. Very easy, you can locate the divergence. So look at it, guys. Now look at it. Once price now break this side, you should know that it's actually going to go for a sell. When it breaks this side going up, it's going for a buy. That's one signal for you to use the MACD. Then if you want to understand the strength of it, is that this histogram must actually appear at the front, at the up, going from down to up. Once the histogram has appeared in the other side, it means that it's actually a strong trend. Either it is trend for a sell or for a buy. But when you see that the histogram line begin to reduce, just know that the trend of the market is actually what? Reducing. The momentum, sorry, of the market is actually reduced. So these are the things you need to watch out for when you are using the indicators. When you are using indicators, you should watch all these things and look at divergence. We're having different divergence, which can actually help you to understand the movement of the market. So this is how you can use the indicator to predict the market. Let me tell you the truth, no matter how good you are, you must use indicator. No matter how good you are, even though we don't analyze our markets only using indicator, but you must use indicator in order for you to get a good entry and exit. You must use indicator. Indicators are there to help us, but we don't depend on them alone. We use them with other trade ideas, because indicator is a technical tool. It's a technical tool. It's a forex technical tool, while we have the other like the fundamental and the sentimental. So we use others like the sentimental and the fundamental to analyze, not only using the technical tools. Are we together? So don't allow someone to deceive you that indicators are not good. Indicators are good and can help you very well. In fact, there are some indicators that are actually leading indicators, but most of these indicators are lagging indicators. But there are some settings that you will do in this indicator that it will help you to predict even the future where price will go. But this one is actually for advanced learning, where I will be teaching you my own personal strategy. This one is for advanced learning, where I'll be teaching you my personal strategy, showing you how you can use my own personal system in order for you to trade, even with your phone, with your system, and anything with your laptop. You can use it and be making money. That one is another level. It's for for advanced class and for mentorship class, and not for this free class. But with this, you can use your indicator and make profit. With this, you can still use your indicator and make money for us. Thank you so much for watching this video. If you have not subscribed, don't forget to subscribe to this channel. Thank you so much. Thank you for watching this video. Do like, share, comment, and subscribe to this channel for more information.